Hey, good morning, everybody. Today is Wednesday, February 11th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Markets were higher Tuesday as both the NASDAQ Composite and the S&P 500 recorded weak accumulation days. An accumulation day is a trading session where the market closes higher on heavier trade than the prior day, and it's a sign of institutional buying in the market. It's this institutional buying that we're trying to recognize and to get out in front of in our trading portfolios. That said, yesterday's accumulation, which came on below average trading volume, was hardly convincing. Let's take a look at the NASDAQ Composite. NASDAQ Composite was up 60.63 points yesterday, or 1.3%. NASDAQ closed at the top of its daily trading range, which the bulls like. Trading volume was higher than the prior day, but was below average daily. It's this higher trading volume on an up day that gives us the accumulation day. Would have been nicer to see the accumulation come on above average daily volume, but for now, we'll take what we can get. The NASDAQ continues to be locked in its sideways pattern that it's been in since making its recent high on November 28th. We are on an aggressive buy signal on the NASDAQ. An aggressive buy signal means that we can add to our long positions in our portfolios, but we shouldn't be increasing margin. Right now, the NASDAQ is bracketed by minor support around the 45.67 area and resistance in the 48.11 range. I'm not going to be completely convinced that this market wants to go higher until we can take out that resistance in the 48.11 area. We are on an uptrend under pressure in the market. The market confirmed the uptrend on January 8th. Since then, we've had 5 distribution days on the NASDAQ. Tomorrow, this distribution day will disappear due to age. Distribution days no longer matter after a month, and so we stop counting them. We've seen a little bit more accumulation recently than distribution, and that's a good sign. But like I said, I'm not going to be convinced until we can take out that resistance area in the 48.11 range. Let's take a look at the S&P 500. S&P 500 yesterday was up 21.85 points. That's 1.07%. S&P also closed at the top of its daily trading range, which makes the bulls happy. More importantly, the S&P finally took out minor resistance in the 2064 area, freeing it up to challenge resistance in the 2094 range. The S&P 500 is on an aggressive buy signal. Trading volume yesterday was slightly higher than the prior day, again giving us an accumulation day on the market. But because the trading volume wasn't higher than average daily, that accumulation yesterday becomes a little bit suspect. On the S&P 500, we are in an uptrend under pressure. The market confirmed the uptrend on January 8th. Since then, we've had quite a bit of distribution, but this distribution early in the uptrend is scheduled to fall away by the end of this week. And we do have quite a bit of accumulation on the S&P 500. We've got 1 day, 2 days, 3 days, 4 days, 5, and then we added a 6th accumulation day. yesterday. So things are beginning to look a little bit more healthy for the S&P 500. It would be nice to see if we can take out this resistance. S&P has minor support in the 1992 area. And that's about all I have for today. If you want to talk about the markets or any of our trading strategies, please feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come on by the office, see what we're up to. If you're out of the area, we can set up a Skype session, see my contact information on the homepage. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, please take a quick look at our disclaimer video posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.